Good morning, ladies and gentlemen, and welcome to the show. Listen, really glad to have you guys here. Today is Monday, 2nd of December, 2019. And you know what? People watching my channels dropped off a little bit. Well, there was all this trouble out there in the financial system a little while ago, and everybody was concerned. We were having the yield curve inversion and everything else, and everybody's thinking, oh, we're going into recession. Now everybody's calmed down. Everybody's went off their own business, not paying too much attention right now. I want to tell you guys something. We've never been closer to the crisis ever. The real crisis beginning. Fed's behind the curve. What I mean by that is in the repo market, a lot of that money they're injecting is short-term operations. Money has to be paid back. And they keep injecting this liquidity. It's like a stopgap measure. It's like just something to get you through for a few weeks. It's all this liquidity. They say, oh, they're injecting 300 billion, 200 billion, 100 billion. This, yeah, but that money is not really liquidity that the system can actually keep running with. It's just something that's going to tide you over. It's like a snack before dinner, This is what it's like, And now they are doing some quantitative easing that's not called quantitative easing, But the thing is the system right now is dry of liquidity, and this is why there's a huge dysfunction within the financial system right now, where they're getting scared to lend within banks to lend to one another. It's actually the cogs and grease of the system. The system's like a machine that hasn't had any grease and it's getting ready to seize up. There's a huge problem in the financial system right now. And it's not being really addressed. It's just being covered over, papered over with this repo operation. So let's get the chart started right here and take a look. The recent repo scare carries a deeper warning. Looking back at the repo liquidity panic a few weeks ago, and the accompanying fears that the bond market may face future liquidity shortages, one has to wonder, how can financial markets lack liquidity when the Fed, between 2008 and 2014, created literally trillions of dollars in reserves, the basic stuff of all market liquidity, and in the years since has removed few of those dollars? Banks still hold abundant unused reserves. This is called a liquidity trap. Basically, the Fed, they inject massive amounts of money. The banks just trap that money within the system. The money created for hyperinflation is already there. We're moving into a tremendously powerful situation that's setting up right now, moving into next year, where the Fed, it hasn't really done that much yet. That's why they're behind the curve. They've lowered the basis points and interest rates a little bit, but now they've stopped. They're doing this repo operation, but this is just a temporary measure, doing a little bit of quantitative tight easing, but all of it's not enough. It's been satisfactory for a little while to push the stock market up higher in the short term, right? But we are heading for a mega crisis, I believe, in 2020, Now, they've delayed this thing far longer than I ever thought they could, and they're still trying to delay it. But the whole world now is starting to sink into a recession, and basically it's small what's happening, them trying to stop it. It's only holding it off for a little while. Things are going to really worsen next year. Wait and see, guys. Let's turn the charts on and take a look here at silver price today. What we're looking at is a lowering price in silver. Boy, they're putting it on sale for us, with their manipulation. And they're keeping the price down low. possibly out there. It's probably the most devalued, I mean, the price was a lot higher a few years ago, back when prices were cheaper on everything else. If it keeps moving in this direction, people will be able to pave their driveway with silver. Quite seriously, because the price of gravel's doubled or tripled, you know. The price of asphalt's went up 3 times or twice, and silver prices is been cut in half. Let them do that a couple more times. Let the gravel price go up, double again and double again, and let the silver price continue. Something's wrong here. Something's wrong here. There's something missing in this. This can't be actually working properly. Well, no, it is, because in the fact that they're creating all of these paper short contracts to make it seem like there's 100 times more silver than what there really is. The real underlying product, the real actual physical silver, is so much less than what it seems on paper how much silver there is, and this is what's really going on out there. So look at the price. $16.90. They've knocked it down 11 cents on the day so far. Let's take a look at gold. It's down $4.70 on the day so far. But it is riding in its trading range. It hasn't went below its trading range. Let's take a look at cryptocurrency today. You know what we're looking at is 198 billion. I got to refresh the page here. Yeah, it's still 198 billion. 66.6% Bitcoin dominance. And what we're looking at here is all of the coins actually going sideways, just like gold and silver. In fact, the price movement of the cryptocurrencies right now resembles the price movements of gold and silver so closely, the way they're moving together. The whole crew of it, gold, silver, and crypto, is all moving similar right now. It has that similar feel to it, guys. Let's move on and take a look at the Dow Jones Industrial Average today. 28,022. It's down 28 points on the day so far. Refresh the page. Okay, down 18 points on the day so far. Now, let's take a look at the crude oil price. And there's something I want to say about crude oil. It's up $1.24 today, which is 2.25% up. So it's up quite a little bit today. Let me take a look at the 1 day, and you'll see this rise in price. Listen, guys, I'm going to tell you something about crude oil. The only reason crude oil is cheap, $56 a barrel for sweet light crude, is because of the U.S. fracking industry. And what happened was out in West Texas and places like that, when they first went there, the oil was in high pressure underneath the ground. There's big, huge pools of oil. They went in there and they dug a well pipe down into it, and it come gushing up into the air, and they'd all get wet like rain, the oil. And we struck oil, and that was the big thing about striking oil in the old days, The oil would be a gusher. They call it a gusher. It'd shoot up, and it would shoot up 1,000 feet in the air, Well, they tapped all those wells, and they sucked all that oil out. And they didn't have to frack it to get it out of the ground. Now, with the fracking industry, they have to go in there and they have to use steam. They go into those old wells that were drained dry, and they use steam and high pressure and everything to just leach what's left of the oil off of the rocks. So if you picture underneath the ground a cavernous hole where they've sucked all the oil out, way back, like Standard Oil, sucked all the oil out of the ground. And they left a big cavernous hole. They go down that hole, and there's still oil stuck to the sides of the rocks and stuff. The fracking just basically uses high-pressure steam and stuff to knock that little bit of extra oil off of the rocks and stuff. And so, in the end, what happens is it doesn't last very long. They don't get oil like they used to get. They're just basically steaming off what's left. It's almost like if you had a thick shake, and you sucked all the thick shake out and you drank it all. and there's a little bit left in the bottom of that gooey thick shake. It's like digging that last little bit out with your finger. That's what a fracking well does. Well, it doesn't last very long, and they have to keep drilling new holes and at big expense. The U.S. fracking industry is right to the point now where it's going to start to decline. It's going to go into decline really, really fast. And so United States oil production will just drop off a cliff. Basically what's going to happen. OPEC is just sitting there, and they got their hands rubbing together like, oh boy, we can't wait. It's going to be a few more months, maybe another year or two, but they know that U.S. oil production is going to decline, and they know that then they got what they need. They got what they need to jack oil prices up. And this is a year or two away. It may be 2-3 years away, but oil prices are going to scream through the roof. They're making those new cars I was talking about. There's one out on the market right now, 175 miles per gallon. It'll carry 2 people, and it'll do. You can drive it on the highway and everything. It's great. It's a great little car. Carries 2 people. Got a little luggage thing in the back, where you can put your groceries and stuff. And it's got handlebars. It drives like a motorcycle, but it's a car. It's a car, but it's got 3 wheels. Great little rig. They're making them. They're making them already. Okay, U.S. Treasuries this morning. This is where we're seeing the biggest movements in the markets today. This is big. We're seeing very large movements. Treasury yields are rising today. 8.7 basis points on the 10-year. 2.28 on the 10-year. 1.85 on the 30-year. Sorry, that was a 30-year. The 10-year is 7.4 basis points. 1.85 on the 10-year. That's a big move in treasuries. Treasury yields are rising a lot today. Got to keep our eye on that, see if it continues tomorrow. So let's take a look now at the dollar index. Where's my page? Well, that's funny. I'm not getting any dollar index. Come on. The dollar was falling. It was 80. This is frustrating. Not getting my dollar index. Sorry, guys. I haven't got the dollar index today. But the dollar has fallen somewhat. Fallen off a little bit this afternoon. Not significantly, but it was falling some. Continue to try to get that page to come in. Come on. I don't know what the problem is. Okay, we'll have to update the dollar index tomorrow. Listen, thank you guys for listening to my show. Give me a thumbs up, and we'll catch you guys in the very next episode. Bye-bye.